Good afternoon, everyone. Welcome to our Reflections Live broadcast. Once again, it's so good to be back with you all today. So unfortunately, we missed our last session on Friday, and that was due to some technical issues, but we're back online and everything's sorted. So it's really good to be back with you all. Today, I have the phenomenal Michelle Dickens with me. And Michelle, if you can just say hi to everyone.
Hi, Candice. Hi, everyone. Good to be here. Thank you.
Awesome. So thanks, Michelle. Thank you for joining me. And ladies and gentlemen, today we're going to be discussing investing in the South African rental market. So we're going to be getting into that topic today. But I think just before we get into our topic for today, let me just make sure everyone is connected with us here online. So I'm just checking that. Once again, I've got multiple devices in front of me. So let's just make sure that we are live and all of you can connect with us. We would love to acknowledge all of you today. So just give me a moment there. Awesome. So Michelle, how are things going on your side?
So, Candice, I'm so pleased to report back that it looks like we might have hit the bottom of the collection cycle, the dip of the cycle. And it seems like July's collections might end close to what they were in April, which is a huge improvement from May and June. So anyone with property investment, certainly from a residential perspective, it looks like we may have seen the bottom of the cycle.
That's really awesome, Michelle. Wow. And I mean, what do you think, brought about that change now over the last couple of weeks, especially?
So, Candice, I think the reality is that a lot of people who are earning an income again are back to earning the income. Let's not discount that there are still lots of people who have lost their jobs. There are lots of people without work. But because the economy is slowly starting to come, the wheels are slowly starting to turn again, we are seeing that collections have improved. They are nowhere near what they were at their peak, and it's going to take, I believe, many years to get back to where they were. So this is not a quick fix, I suppose, and it's not, yay, that's the end and life is back to normal. No, that's not the good news that I bring, but the good news that I do bring is that there has been, I feel, from a residential perspective, that we have reached the bottom, and there has been a very small improvement. And certainly from a residential rental perspective, landlords are getting paid again. I do think that the challenges that we're seeing ahead relate to vacancies and escalations, especially in the top end of the market. I'm getting feedback. So our vacancy survey, as you know, we did in May, and the next one will be due to do next month. And I was so tempted to put out an early one based on the information that we're receiving, which is certainly in the top end of the market, that we're seeing vacancies. We're seeing a lot of people looking, 10 different properties with multiple different agents, which may or may not even result in a lease at the end of the day. So I think a lot of frustration from that perspective. And landlords are definitely facing, right now, landlords are definitely facing a slowdown in escalations. Rental reversions might actually be on the cards in the upper end of the market, and higher vacancies.
Yes. So I think we've actually just got right into it there. So we'll pick up on that topic, on that specific issue shortly, Michelle. I think let's just make sure, so I can already see some people have joined us. Thank you everyone for joining us. Please do continue just signing up now and logging in and just joining us. And I think just to get started once again, my name is Candice van Wyk. And for those of you who are joining us for the first time, this is our live reflection broadcast. I've been doing these every Friday except for today, because of the challenge that we had last Friday, but we've been doing them every Friday since about the end of May. And one of the reasons why I really launched this particular platform, we've got our YouTube channel live as well, and we'll share with you all the links in the chat box shortly. But one of the reasons why I actually launched this particular platform and this channel is because I've been an entrepreneur since about 2010, and I've always been looking for that one platform where I'm able to tap into, where I can get insights and learnings and inspiration and ideas, in the areas of business, of property, also in the areas of, general health and mental well-being, as well as spiritual growth and development, fashion, beauty, all these wonderful topics, that women are so passionate about. And I was looking for that one platform to find all of this, and I couldn't find it. And with lockdown now, the last couple of months, I thought to myself, you've been thinking about it for a while now, so you might as well just launch this platform. And as you know, for those of you who have been joining us every week, I launched it at the end of May, and I've had phenomenal and amazing entrepreneurs and investors really sharing, in terms of their businesses, also topics that they are passionate about, and also with the objective to really empower you and inspire you out there, and also to help you move some of your business goals and property goals and financial goals forward. So once again, I've got an amazing topic for today. It is investing in the South African rental market. And as you know, our theme for July is really building your wealth. And that is why I really feel that it's appropriate that we have Michelle Dickens with us. And for those of you, I'm sure many of you out there know Michelle Dickens. She's no stranger to the property industry. She's really been working in the industry for many, many years. In fact, for those of you who don't know her, she is the MD and the co-founder of TPN Credit Bureau. So you may be familiar with the platform. I know investors out there are definitely familiar with her platform. She launched the business in the year 2000. And one of the reasons why she really launched the business was before, becoming the MD of the business, she was a rental agent, and she had to deal with the frustrations of managing some delinquent tenants out there. And as a result, she decided that she was going to launch this business, launch this platform, obviously with the objective to also, address some of those frustrations that she was experiencing as a rental agent. And it's really just developed from there onwards. And as I said, she's really no stranger to the industry. She's done amazing work, and her platform, and we'll share more details with you later, but her platform has really helped a lot of investors also make some good decisions as far as analyzing and assessing the deals are concerned. And today we're also going to be focusing on really that side of a business and how she's able to help property investors make better decisions before just buying a property and going to invest in a particular area. So once again, Michelle, thank you so much for joining me. I think I just want to hand over to you at this stage. If you can maybe just tell us a little bit more about yourself, and then also just tell us about TPN, your business, and then we'll move right into our interview questions for today. Thank you.
Thanks, Candice. So yeah, you talk about being an entrepreneur and my history. And I love to share the story. I remember when my granny came out to visit, and I was 12 years old, and I told her that I was going to be my own boss. What do you want to be? I want to be my own boss. And so my vision was always to have my own business. And I started off doing, the things that you do as kids, selling T-shirts and consignment stuff and stuff like that. And a degree in accounting, because you know what, you've got to know your finances. You've got to know your finances. You've got to be able to look at present value and future value, and what is my interest rate, and what is this going to cost me. All of that is really, really important, specifically for your property investment. And I found my passion, Candice. I found my passion in property. I love property. It wasn't a direction that I was heading. It wasn't my boyfriend at the time was in property, and I thought, that's something that I can do, right? And so I became a rental agent, and I was a rental agent for 3 or 4 years. And as you said, there were some frustrations with delinquent tenants, and I said, right, this is it. We can do something here. We can create something new, a platform where, as landlords or agents, we can communicate with each other, and we can share our stories. And hopefully motivate tenants then, because there will be repercussions for non-payment behavior. And so that was the journey. And I think property is such a wonderful opportunity for people to create their own businesses, their own wealth. I love to be in control of my own stuff, my own destiny, right? And I think property gives you that. It gives you that in terms of the ability to create capital growth. And I'm by no means, I'm not blind to the fact that capital growth in this country has been nowhere for the last 10 or 12 years. But there's still opportunities. There's still opportunities if you look for the right deals and you buy at good value, where you can achieve your capital growth. You've got income growth, so you can earn an income every month out of your property venture. You've just got to be smart about your tenant placement, where you're buying, run your numbers. I mean, these are things that we taught all the time, right?
Yes. And Michelle, you know, that's an awesome thing. And I think one of the things that you and I definitely also share and have in common is really our passion for property. And I also learned, you know, along my entrepreneurial journey that it's important. And in fact, I feel very strongly about this. I believe that, in fact, every entrepreneur, and especially every woman entrepreneur, needs to have property as an investment strategy. So whilst you're pursuing your entrepreneurial goals, I think it's important to start building your property portfolio, you know, on the side. And as you mentioned, you know, it's an opportunity for us to obviously generate some additional profit income. But at the same time, I also believe it's an opportunity to start building our wealth, you know, as we start investing in property. So I really am also very passionate about the topic. And it's so awesome to have you, because you're not only an entrepreneur and a very successful entrepreneur, but you are also a property investor. And that's the awesome thing. So you're also going to be sharing some of your insights, you know, wearing your property investing hat. And I think that's really great for the audience today. So ladies and gentlemen, once again, for those of you who've just joined us, if you do have any questions, any comments, please share with us in the chat box. Feel free to share this video with your friends as well. Let us all connect. And I really believe that it's going to be an insightful session that we're going to be having today. So Michelle, I think, you know, just to maybe set a little bit of a context for the audience, if you can maybe just share with the audience, how big is your tenant database across South Africa at the moment?
Yes, Candice. So TPN's role in the market is to collect data, and the goal is to collect data every single month on every single tenant in the entire country, on both residential and commercial, so office, retail, industrial, storage, holiday, student, residential, all of it. On the resi side, we collect about 800,000 active leases on a monthly basis. And that's across the board. So it can be for as little as 1,000 Rand a month rental, all the way up to 180,000 Rand per month rental. And it's around the whole country. So there's not a single town in the country that we're not collecting rental on. We're very much focused on the formal market, although we do have some informal rental. And it's absolutely a passion that I want to grow, because it's not just about the landlord and protecting the landlord's investment. It also empowers people by having, especially people, we call it in the credit bureau industry, we call it thin files. This is somebody who doesn't have a lot of credit on their credit profile. So think of your student, an 18, 19, 20-year-old coming into the credit market, wanting to buy their first, I don't know, car finance, or even your first home loan, and you don't have any credit on your credit profile already. A rental is a beautiful way to start that process. And it empowers you to then use that rental payment that you're already paying, create a positive credit payment profile on your credit profile, credit report, and then use that to jump into the next layer of credit that you might be interested in. And for me, I'm all about good credit, not bad credit. So for me, good credit is, well, how is it creating an asset of value for you? So is it a property? Is it education that you want the loan for? Versus bad credit, which is just consumption usage, right? So I was brought up with, if you can't afford it, you don't get it, right? There's no credit. You don't put it on credit. If you can't save up for an afforded mesh, you just don't get it. It's not something. So I've always been brought up with very limited credit, and I understand that if I take it, it's for good credit. So TPN, we have 800,000 active leases on the credit bureau, and pre-lockdown, 82% of those tenants were in good standing. So actually, whereas we went out and said, oh, we want to create a database of delinquent tenants, we created a database of good quality tenants, because that's really who it is. And that's changing the story, Candice. That's changing the story from saying tenants are terrible, tenant from hell stories. No, the stories we should be sharing are that there are 82% quality tenants out there, which means that having a property as an investment is not a bad investment.
Yes, yes. No, that's really good insights. And I mean, first of all, you've got a massive database across South Africa as far as the residential market is concerned. And I mean, we're only touching on the residential market at this stage. So that's really amazing and well done on that. And another thing that you also just touched on there is that, generally, I think the perception out there is that we have more bad tenants than what we have good tenants. But according to the data that you are collecting, I mean, 82% of your tenants right before lockdown were in good standing. I know it took a little bit of a dip, as you shared with us before, but now you're saying you are, slowly moving back to that 82% again, as far as good standing is concerned. And that's really positive, isn't it?
No, exactly. So when we went into April, we dipped down to 76%. May, we were down at 71%. June, we're going to end it at around about 71% as well. And I'm watching the numbers every day. And where we sit at the moment for the end of July, because remember, we've still got 9 days of rent to collect for the July period. I'm looking at the numbers and I'm feeling that we're going to end up, based on where we were in April, it looks like we're tracking April. So it looks like we're going to end up similar to what we ended on April, which is 76%. Look, we're still not at the 82%. Yes. The global financial crisis, we also bottomed out at 71%. So I am seeing light at the end of the tunnel for landlords.
That's awesome. And I mean, as you said, obviously people have adapted. And I think also what has happened over the last couple of months, I know there's also been some banks that have been giving people some payment reliefs. Even landlords have done the same. And I think probably, people are starting to get a little bit of a grip on their budget and their finances. And that's probably one of the reasons why we've seen a little bit of an increase there. But I mean, that's still amazing news. And I think my next question would have been, and I think you've answered it already, is that do you still believe, considering the impact that COVID-19 has had on our property market, do you still believe that now is definitely still a good time for people to invest in property in South Africa?
So COVID-19 absolutely had an impact. There are other structural issues that precede COVID that make property maybe not as attractive now as it was in the past. So a couple of the examples would be things like the rates and taxes. And the rates and taxes escalating at a much higher pace than what rent can escalate. So your cost of property ownership is now much more than it was, say, 5 or as far back as 10 years ago. There's other costs that are being passed on to the tenant that when I was an agent in the 90s, we weren't passing on to the tenants because there was so much profit in rental property investment. Things like sewage costs, refuse removal. In those days, the landlord didn't even pass water onto the tenant. And you'll see over the years, the lease agreements have changed to say that the tenants are now liable for, and instead of just being rent, it's rent, electricity, gas, DSTV, network charges, a host of sewage, refuse and removal. There's a host of additional charges that tenants are now liable for. And so it's very important that landlords are aware that when we're budgeting for what is our gross yield or what is our net yield, it's not a simple case of what did I pay for the property and what is the rental income that I'm getting from the property? What are those additional charges? To what extent will the owner be absorbing them? Because often in the lower end of the market, Candice, the landlord absorbs a lot of those costs. So like your 1 bedrooms, I've got properties in Windsor, right? And those 1 bedrooms in Windsor, you're just simply not charging a 400 Rand sewage charge. You're just not passing that on to the tenant. That's 10% of his rent. It's not happening. We've already got him on prepaid electricity, you've got him on prepaid water. And so it's about understanding the full extent, and this is sometimes a trap that many first-time property investors get caught in. What does that full calculation look like? What is my market value? What am I buying it for? Am I getting it at a discount? The better you can get your property at a discount at the moment, and your question is it a good time to buy property? Always a good time to buy property, depending on where you are, what your stage is. But to what extent am I getting it discounted to the market? My first property that I ever bought was a property that I was buying to live in. So I had the benefit, guys, I did have the benefit of living at home still with mom and dad. and I got it at 50% discount to market value, simply because I had the time to sit and wait for that perfect house in the perfect suburb where I was already living, that made sense to me. So discount to market value is important, but then also understanding to what extent am I going to pass costs on to my tenant, and how's that going to impact on my profit.
For sure, Michelle. No, definitely. And I think you're definitely right. I mean, the trend has definitely changed over the last couple of years in terms of what landlords are really passing on to their tenants in terms of, services that tenants are using. And of course, that also is just to also make the numbers more attractive for the landlords because of these escalating costs and its services that tenants are actually utilizing, at a particular property. So that obviously then becomes an opportunity for an investor. But I also think it's important, as you say, that the investor or the aspiring investor really makes sure that they buy their properties at the right prices. So yes, it is a good time for us to invest in property, but we also need to make sure that we buy our properties at the right prices, and we also need to make sure that the numbers work at the end of the day. Because I remember when I bought my first property, I mean, I thought I was buying an investment property. I didn't know anything about running the numbers, about doing your due diligence. We just hear these stories from family members or friends or people in our network, and they say property is a good investment strategy. And you think, okay, let me get one of those. And obviously, I didn't know anything about market value at the time, and which meant that I paid way more for my property than I was supposed to pay for the property. When I wanted to rent the property out, in fact, I was making negative cash flows. I was making a loss on the property because I didn't know anything about running the numbers. I didn't know anything about the additional costs that you can or that you cannot pass on to your tenants. So I didn't have any of those insights. And as a result, I made losses on that property, got myself educated, and obviously I've been able to turn the situation around in some of those bad decisions and deals that I made in the past. So I think for people out there, especially for those of you who haven't started investing yet and you are still in your early journey of investing, really, I think it's important to make sure that you first understand what the market value is for that particular property in that area. And Michelle has got some good reporting on her platform, and it's Michelle, and just correct me if I'm wrong here, it's shop.tpn.co.za.
100% correct. Yeah.
Yes, so I'll just say that again. So it's shop.tpn.co.za, and we'll put it in the chat box for you as well. So just remember, it's important for you to make sure that you pull those valuation reports and investor reports and see what the market value is of your particular property that you are interested in before you actually go out and pay that price for the property. I think that's the first thing. And then, of course, it's important for us to make sure that we understand all the costs that are associated to that particular property. As Michelle mentioned, there are some rates and taxes, that you also need to take into account. And some of the costs have really escalated across municipalities. So make sure you are aware of those costs as well, because someone's going to have to carry it. Either you're going to have to carry it or your tenant's going to have to carry a portion of it. To just make sure you understand that. But Michelle, thank you for sharing those insights, and thank you for also confirming that it's always a good time for us to invest in property. It's just about making sure we do our homework. Now, in your experience, Michelle, with all the data that you've been collecting, across your various areas that you are working in, what would be a good rental price bracket for investors to focus on first of all? So before we even get into the areas, where do you see that tenants are really performing well across the rental price brackets?
This is such a complex question. It's such a complex question because there's different ways to look at an opportunity. And so we look at data, just to take a step back. So we look at data on the tenants that rent for below 3,000 Rand per month. We've split our 7,000 Rand categories. So 3 to 4,500, 4.5 to 7, 7 to 12, 12 to 25, and more than 25. So the worst performing tenants are the below 3,000 Rand tenants. They are very challenging to collect rent from. But your yields are really high in that market. So high risk, high reward. Then you've got your above 25,000 Rand tenants, very difficult to collect rent from as well. So those are our two challenging markets. Then we've got our 3 to 7,000 Rand rental market. And you know what? The reason that I always refer to this market is because 54% of tenants rent in this market. It is a very large market share. But I'm going to split it now, and I'm going to say that the tenants in the 3 to 4.5 still quite challenging to collect rent on, and in fact are deteriorating. So let's cross them off the list, and let's look at our 4.5 to 7,000. Very attractive, lots of market share, good demand for properties in this market. Then we've got our 7 to 12,000. The market share not quite as much, sitting at around about 20%. But they are best performing in terms of how they pay their rent. So where, as I said just before lockdown, 82% of tenants were in good standing. In this market, the 7 to 12,000 rand tenants, 87% of them are in good standing. So low risk in terms, not no risk, low risk in terms of your rent collections. But it's not just about your rent collections, because you still have to factor in potential vacancies. You still have to factor in your yield, because ultimately, what are you doing this for? You're doing it for a return. And yields are best in sectional title versus full title. So give that some thought. Of course, you still have to calculate in your levy on a sectional title versus your levy or no levy on a full title. Some houses do if you're in an estate. So you need to factor that in. And then it's about the size of the property, Candice. The smaller seem to attract better yields because you're able to rent them out at more than the 1% of market value. And if you can rent out at more than 1% of market value, that gives you your gross yield of 12%. The more you get, the higher you get as 1% of market value, the higher yield becomes. Versus obviously the converse of that is if you're only renting, if the rental value to market value is only 0.5%, you're way below that 12%. So that's kind of your starting calculation point. So it's not just about what is the value of the property, although as I said, the 4.5 to 7, that's a good value, and the 7 to 12 also. You're right in the thick of where the demand is.
Yes, and I mean already, Michelle, I know that's not the only factor that we have to take into account, but I mean the fact that you are sharing with us in terms of good paying tenants. I mean, you've given us some good indication here that a good price bracket for us to definitely focus on is more from the 4,500, and that can obviously go up to the 12,000 rand price bracket there. So I think that's some good insight. So as we do our research, as we understand where the opportunities are, where there's demand for property, I think that's some good indication that let's try and focus on that particular price category to assist us also in terms of making some of the investing decisions there. And then Michelle, I think, and I know, from previous conversations, it's also not always an easy response that you can give us. And I think a lot of people that, I engage with as far as just coaching is concerned or just wanting some general insights, they always want to know where are the good areas to invest in, as far as property is concerned. And I think everyone kind of just wants that information because it just makes things a whole lot easier for them, So in your view and, in your expertise, where do you think are really the best areas for people to invest in, or how do you think they can go about making that decision?
I'm going to give some personal insights. The first is how far is that property from where I stay? Because if I'm going to be self-managing it myself, and if I'm going to be seeing tenant churn every 12 months, and if there are going to be maintenance issues that have to be dealt with, I do not want to be driving 50 kilometers to my rental property. So I think one of the considerations is where am I located? And if I'm going to self-manage these properties, if I'm going to DIY them, then traffic to and from those properties is quite important. The second consideration is there is definitely a difference in management of rental portfolios within inner city versus suburban. There are different management styles. And so I would carefully consider any inner city purchase that you are looking at. For me, if I am looking at sectional title, one of my lessons was if you are buying 1 or 2 properties in a small complex of only 8 or 10 units, the challenge is not actually how the tenant behaves, because you can control your tenant. You control putting your quality tenant in. Your challenge is actually the other homeowners in that complex and how they're paying their levies. And so your risk is very concentrated. If you've got one or two bad homeowners or other investors in that complex, your risk of delinquency on the whole complex is quite high. So if you can afford to buy all 8 units, that's great, because then you're in control of your own destiny. Otherwise, spread your risk across bigger complexes. Where there's 100 other owners and 2 non-paying owners is not going to bring the whole complex down. Public transport is really important. So find an area where there's good public transport, good nodes, good schools. You know, especially in Gauteng, school placement is dependent on how close you are to the school. So find good schools. So it's not necessarily, oh, you know what, Stellenbosch is the best performing suburb in the country in terms of rent collection. Because Stellenbosch might not be a town that we all want to go and invest in. There are towns, there are little towns, and there are opportunities right around us, probably right in the very area that we live in. So it's about identifying those qualities of the town, not necessarily just, well, which town is it. For me, it's about finding properties that there's not an oversupply. So when you're going into the town and you're having a look at it, has there been a lot of new development going on? Because, you know, we've had a huge amount of development pre-COVID going on. And if you're buying into a complex which is brand new, and you're going to compete with 100 other investors to find a tenant in month 1 when everyone receives their property, that's going to be difficult. And you're going to face high vacancies and reduction in rent while everyone tries to lease up those properties in the first 3 or 4 months. So these are the tips, rather than just saying, guys, you know what, Pretoria West, that's the place to go and invest. Although Pretoria West is not bad.
Yes. No, so I think, I mean, you already shared some good insights, and I think, you know, that's so true. I think it's important, you know, look at your own area. Where are you staying in at the moment? And really understand, you know, where the demand for property is in your area, what is happening in your area. If you are going to cater to, if you are looking to cater to a family, I mean, they've got kids, schools need to be close by, you need to have some retail operations in the area, you know. So it's those basic decisions that we normally make when we decide where we want to stay. So I think sometimes it's just a matter of putting yourself into, you know, your tenant's shoes and trying to understand what is really important to them. And of course, you can also reach out to some of the agents in the area and try and understand where the demand is and what tenants are looking for as far as property is concerned. And that can also help us with some of the decision making there. But I think it's important, you know, look at your own area, see if the strategy that you are considering, you know, whether it's, and we're talking specifically about rentals today. So if you want to buy a property to rent out, make sure that there's demand for that type of property after you've obviously also taken into account the market value, you've run your numbers, and you know you're going to get some profit income at the end of the day once you've considered all the costs involved, and you're taking that and you deduct it from the rental income. And I think, yeah, there's probably some opportunities in our own areas where we are staying in at the moment, and we can start looking at those opportunities. But thanks for sharing your insights there, Michelle. I think that's really good guidance and advice there for people who are wanting to get started in property. And another thing that I also just want to ask you, Michelle, around that is, you know, so it's important for people who want to invest in property to make sure that we do our due diligence as well. So the type of reporting that you have available on TPN, could you possibly maybe just share 1 or 2 reports that you believe are very good reports and tools for investors to use before they actually, you know, whilst they're busy analyzing the deal, before they actually make the purchase? Can you just share with us which reports can actually help investors to make better decisions?
Sure. So I think the first thing that I'm going to share is, because I'm a property investor, everything that I have developed on there, I've developed because I've needed it. I said, you know what, it would be so nice if we had this. I'll give you an example. I needed a lease agreement. So I went to my commercial attorney and I said, draft me a lease agreement. So he drafted me a lease agreement. And then all of our clients said, Michelle, I need a lease agreement. So I was just giving my lease agreement away. Oh, my attorney drafted this here. And you know, Candice, lease agreements become very old very quickly
Yes.
because the law changes. And all of a sudden, this component of the lease isn't keeping up with the time. So I thought, you know, there's got to be a smarter way where it's got to be affordable. I can't go to my commercial attorney every 12 months or 2 years and say, draft me a new lease agreement. It's too expensive. How do we do it that we can get it to market at a price that is available to every single landlord out there? And so we did it in a way that you can get an entire lease pack with 30 documents in it for 350 Rand per annum. That is the price that you would charge your tenant for their lease fee. Even if you were a property owner with one property, that charge you can pass on to your tenant, because it's one cost and you can use it as many times as you want. And the beauty is that TPN updates it every 2 months. I sit with the board of attorneys and I sit with them and I say, right, you know what, I'm getting feedback that this has happened and people would like these changes to the lease, or this lease agreement has ended up in the High Court in the Western Cape and the judge said this, or it's ended up at the Rental Housing Tribunal and the tribunal said whatever they said. What changes do we need to make, if any at all, or is it an education component? So guys, if you are getting into property, your lease is the basis of your negotiation with your tenant. Leases can be verbal, they can be verbal, but that's the start of a dispute. If you and your tenant fall into a dispute and you've got no written record of what you agreed, this is where you will end up at the tribunal. So that's the first document that I believe is really important. The next thing that we created was something called an investor report. An investor report, I don't know what to call it. Like, do I call it a suburb report? Because it's about an area. It's about an area. And what I want to know is what's going on in this area. How do tenants get? So where do I live? I live in Sunny Hill, right? So in Sunny Hill, how do tenants pay their rent in Sunny Hill? What is the market value of properties in Sunny Hill? And is that value going up or down? So you can see a trend line. Oh, look, the value of properties in Sunny Hill is going up. And there have been 50 sectional title properties that were transacted last year versus 100 that were transacted the year before. So you've got this beautiful time series to see how many properties are being sold in the area and what the average market value is, sectional title versus full title. Then you can see the rental price index. Again, I can show you on the rental price index, are the rental prices in Sunny Hill going up or down? A 1-bedroom versus a 2-bedroom versus a 3-bedroom, sectional title versus full title. And where they're concentrated. So we might have outliers, but where they're concentrated. And what is the yield in Sunny Hill? So the reality is that in Sunny Hill, my yield is lower than my yield in Windsor. So my tenants are giving me a better return in Windsor, but in Sunny Hill, 87% of tenants are in good standing, and Windsor, it's only 55%. So that's the law of averages. For me, my tenants in Windsor, they pay me my rent on time and in full every single month because I've taken the time to make sure I've got quality tenants that are placed. And so, yes, a 55% good standing in Windsor is the market average, but I know that I will achieve higher to my 90% goal, right? So the data is there, and then you contextualize it. So you say, you know what, I understand that Sunny Hill is less risky, and as a first-time investor, that might suit me better. But I also know that my yield's not going to be quite as high as my 20% in Windsor. But I might get capital growth in Sunny Hill, and I'm definitely not getting capital growth in Windsor. So there's your toss-up.
Yes, and I mean, once again, just some awesome insights that you share there. And I think, you know, the ideal purchase would be for capital appreciation, so capital growth on that property, as well as the profit income that you're able to collect every month. So that would ultimately be the ideal situation. But I think what you're also sharing with us here is that, and you know, as far as your reports are concerned, is that, and I really believe, I mean, I use your reports as well for my personal investments and making decisions around that. And I really think that it's important for us to also have a snapshot view of what's happening in a particular area. Some of us are investing in areas and you're not staying in that area, so you don't really know the area that well. So the report is then just an additional tool that can help us better understand the area, what tenants are paying for, what type of rent can we expect for our particular property types, whether it's a 1-bedroom, 2-bedroom, 3-bedroom, and so on. And so I think those reports definitely help us with that. And another key thing that you mentioned, Michelle, and I think a lot of property investors and landlords have gotten this wrong in the beginning, is to have a good lease agreement in place. In fact, I've come across situations where landlords don't have any lease agreement in place. And when things start going badly, they've got nothing to refer back to. So I think you make a very interesting point there, that it's important to make sure that you're working with a good lease agreement, because that's going to protect you as well as your tenant in terms of the relationship. And I mean, we see a lot of these lease agreements being sold from, different stationery shops, and I'm sure some of you may have seen them. And I think it's important for us to understand that, as Michelle says, things are always changing, and it's important to make sure that you're working with a document that is updated and relevant, for the particular area, as well as for the time that you are investing. So that's very important. So I think those are definitely some cool reports for investors to have a look at. And Michelle, I just have a question here whilst we're talking about valuation. So I've got a question from one of our listeners, and it's Stevens, and he says here, does municipal valuation on a property have significant weight as compared to comparable sales when determining the true market value of the property? So he's trying to ask really what works best, the municipal valuation or the market valuation that you are providing through some of your reporting?
So the municipal valuation is done once every 5 years. So it does get outdated as a result of that. That's the first thing to note. When TPN does our valuation model, so TPN has an AVM, automated value model. And what we do with that model is you bring in the entire, so we've got a copy of the entire deeds database, which is refreshed once a week. So what transactions have been bought or sold in the last week, and have transferred through the deeds office. That gives you then comparable sales. But over the top of that, you also have to have property characteristics. So on the sectional title, it's really nice because you've got the square meterage per unit. So you can use that with your comparable sales of what else is transacted within a complex and within the surrounding areas. But on top of that, you also want to know your characteristics of your property, which is your bathrooms and your bedrooms, and what other characteristics the property has. And there we've got, TPN has two other databases, which is PropBay and RentBay. And you're able to come in as an investor and list your property for free on RentBay. Or if you're wanting to sell it, you can list it for free on PropBay. And it's 100% not monetized, those two websites. At any given point in time, we have almost 50,000 properties to rent on it and 75,000 properties for sale on it. But that gives us property characteristics, and those property characteristics can then be driven into the automated valuation model. And that automated valuation model is then rerun once every 3 months. So every 3 months we run the model, and you've got different models for different housing. So you could have one for the rural housing versus one for suburban. And we've got 5 different models. And across those 5 different models, we then update the market value, as we see it, the automated market value of every single property in South Africa. So that's kind of the difference between the municipal value, and we don't use the municipal value. We've got a copy of the municipal valuation, and we do keep it with our data. So when TPN gives the property valuation model, we're going to give you the automated valuation model that we've derived. We're going to give you a low. So we're going to say, we think that this is the low end of the scale, this is the top end of the scale, and this is the value that we believe. We'll give you a confidence level. So we'll say, we've 4 out of 5 stars confidence that this is the value the property would or should transact at. And we're going to give you the value the property was bought at, because that has bearing on this as well. And we're going to give you the municipal value. So we are going to say the municipal value is whatever it is. We're going to put that in to our automated valuation model as well. So you get to see all that different information. Then, so we give you not just who bought it and who the seller is, but we give you a history of who it was. So right from its first transaction at the deeds office, how has it transacted over the years? And then you've got your comparable sales. So we share that with you. We say these are the other 20 properties within this area, and this is these are the sales that they have transacted at. The point is, it's very transparent, and it needs to be transparent. I believe it needs to be transparent both to the buyer and to the seller, because the more information you have at hand, the better equipped you are to make an informed a value of what you believe you could transact the property at.
Awesome. And that's so true, Michelle. So Stevens, I think Michelle has definitely answered you there in terms of, you know, the value that you can get from what they share with you through the reporting. But I think it's important to make sure that when you're buying property that you compare apples with apples. It's always good for us to see what similar type properties have been selling for in a particular area over a particular period. So that's important for us. And yes, sometimes the municipal valuations are a little bit outdated. So it's not always, you know, a good price for us to work with as far as that valuation is concerned on that property. But as investors, we can use it as negotiation tools. And I know you're familiar with that because you and I have worked together before. So just remember that. But it's important to make sure that you're always comparing apples with apples as far as your deals are concerned. And I think for sellers, and Michelle, you mentioned a good point here, I think it's important for sellers also to know, and especially during this time, if you really want to try and sell your property quickly, you're gonna, and especially if you want to sell it to investors, you are going to have to look at your market valuation, and you are going to have to come in a little bit lower, you know, than what that market valuation is on your property in that particular area if you are looking for a quick sale. So I think that's very important for sellers. So even for sellers wanting to list, I think it's important to also, you know, pull this report to see what the market valuation is on your property. And of course, I know some of you work with estate agents and they can assist you from that perspective. But for those of you who are also maybe looking to list on different platforms and maybe to do some private sales, I think it's important then to also pull the reporting for that use. And I think whilst we're talking about investment property, so one of the platforms that you can really tap into if you're looking for investment type deals is Property Pick. So that's www.propertypick.co.za. So it is a niche platform. It really only has investment type deals available for people who are looking to invest in property. So of course you need to do the due diligence, use some of the reporting to make the right decisions as far as your deals are concerned. But if you are looking for good investment type stock, that is a good platform for you to tap into and then start, you know, making those purchasing decisions there. So I think, Michelle, I think we're running out of time, and I don't see any other questions that we have here. But I think maybe just from your side, Michelle, just some last words that you maybe want to leave our audience, our investors out there, and especially our female investors, if you can just share some last words with us.
So my first lesson, my first ever lesson in my journey as becoming an entrepreneur, if I can even call it that, is that quality over quantity matters. It really does matter. And it's not a case of I'm going to be a property investor, I'm going to be a property baron, I'm going to be a landlord, landlady, I'm going to go out and, you know, now's the best time to buy, property prices are depressed, I'm going to buy up 10 or 15 properties. It's about the quality of what it is that you're buying. Even if it's your first investment property, it's quality over quantity always.
Awesome. And those are really good insights. And I think if I could also just leave the audience, you know, with one comment around this, I think in addition to what Michelle has said, I think it's also important to make sure that if you want to invest in property, you need to make sure that you're going to make your money on the buy. So before you go into that particular investment, make sure you've already done your numbers and you know you are going to be getting additional income and profit income every month from that particular deal. So make sure you always make your money on the buy. And I think that is one of the key things that I can also leave you with. But Michelle, I want to thank you so much. It's always such a pleasure, you know, talking to you and always hearing your insights. You've got so much of knowledge and information, and your passion definitely comes through, you know, in these types of sessions that we do. So thank you so much for making yourself available and for sharing those awesome insights with us. Thank you.
Thanks, Candice. Always a pleasure. Thank you.
Awesome. And thank you, everyone. So thank you for all of you who joined. And I can see some of you are still online. I don't see any other questions. If there are, please just put them into the chat box for me. I will definitely have a look at it later on, and I'll make sure that we respond to all of those questions. We will also make sure that the TPN links are included in the chat box, as well as Property Picks website link, where you can already start looking for some opportunities there. And yeah, and then if you've got any other questions, we will address those later on. So thank you everyone for watching. I hope this was insightful. I hope you got some awesome learnings and insights as far as investing in the rental market is concerned in South Africa. And I hope that next time when we have Michelle back onto our live broadcast, some of you will be able to share with us that you've actually gone out and you've used those reports, you've used those tools, and you've made some, you've taken action and you've started investing in the market. So we wish you all the best on your investing journey going forward. And we thank you for your time. And thank you so much, Michelle. God bless you and all the best.
Thanks, folks. Cheers.
Thanks. Bye-bye.
Bye.